we need. Okay. A payroll journal here, what we want to achieve is entry, that is accounting entries that reflect the payroll transactions in the company's general ledger. Okay, so they record salary, taxes, contributions, payroll. Okay, let's go to then I create a sheet for it, payroll journal. Okay, right. So um before I start with I start with the double entry for the accounting treatment. Let me first of all create a chart of accounts. Okay, chart of accounts. Okay, so a chart of accounts. This is simply a list of the general ledger accounts and their names. Okay, so in the chart of accounts we have account code, account code. Then we have what? Oh no, let me start with um, account name. Then here we say account. Okay. So here it's going to be account name or account description. Right. So I'll start with bank. I'll give it a code of 54201. Then I'll say salaries. I'll give it a code of 62 or okay 7201 or 03. Then you have pension. I'll give it 7204. Okay, so this is the pension expense. Then we have liabilities. Okay, so 72003 and 72004. Right, then we have, if I go to the payroll schedule, we have pay, we have pension, we have a health insurance, of loan. Okay, so this is a loan payable, health insurance. Okay, here the pay pension, health insurance. There is a formula there. So let me kill the formula. So what I'll do is I'll select the range, then I'll do copy, then I'll do Control Shift V. That way I have what? I have killed the formula. So here on the pay, let's Control Z. On the pay, I want it to say payable, pension, payable, health insurance, payable, and loan payable. Okay. So on the pay, I'll give it 43,020. to 1. This other one, I'll give it 43, the pension payable, 43,022. The health insurance payable, I'll give it 43, 024. And loan payable, I'll give it 43, 36. Right. So this is our small chart of accounts. It's a listing of the accounts, general ledger accounts, and it consists the account name and account code. Okay. All right. So here, if I want to have the words chart of accounts in the middle, I can do control 1. So when I do control 1, I'll go to alignment, then vertical alignment. It has to be center. But here, because I'm using Excel Online, it is failing to there isn't that option to have the words spread across the two cells so that these words are in the middle. So what I'll do is I'll use the merge. Okay, I'll use the merge and center. Okay, and put that in bold and also that one in bold. All right, so we have our chart of accounts. So now let's go to the what? To the payroll journal. Hey, in the payroll journal, what will be the debit? What will be the credit? Okay, so when we are paying salaries, what do we do? Obviously, we are charging that salary to the salaries expense account, right? So say salaries. Okay, here I'll do debit and credit. Okay, so the debit amount will be here and the credit amount will be there. All right, so let me just format a little bit. Okay, control 1. Then I put the number there. All right, I have done my formatting. Right, so I'll start with I'll go to the payroll journal, the payroll schedule rather. So you start with we start with the gross pay. Okay, how much is the gross pay? 1,370,000. So you go to the payroll journal and say gross. Okay, I'll just say salary because in the journal, in the GL, you don't have to mention that it is gross, but deep down you know that it's what? That's the gross pay, right? So this is the account name, right? Account code. Okay, what's the account code? So you get the salaries code, which is 72. Right. So the debit, because salaries is an expense, your debit expense. So you get the whole gross pay, the whole amount for gross pay. You put it as what? Okay. Now, um, what else will go to debit? Okay. For now, let's not talk about the gross. I mean the debit. Let's talk about the credit, right? So obviously, the credit will be what? All of these deductions, including the what? The net pay. Okay. All right. So what are we saying? There are two assumptions. There are two assumptions, okay, when processing the payroll. Okay? Number one assumption is all payroll related deductions are paid in the subsequent month or period. Okay? In the subsequent month or period. Okay. Assumption number two, all payroll related deductions are paid in the same month or period. All right. So these are the two assumptions when we are processing the payroll. Okay. I'm trying to find the number. Okay. Right. So which assumption are we using here? The assumption we are using here is assumption number one. All payroll related deductions are paid in the subsequent month. What it means that we have deducted payroll, let's say in July, but we are paying that payroll in the following what? In August, in the following month. And the same with pension. We deduct pension now and we pay in August. Also, we deduct, what is the other deduction? Medical insurance in the current month, which is August, and we pay for them in the subsequent month, which is what? We deduct in July and we pay in what? In August. So in that way, we are creating what? Liabilities. These are liabilities to one, the revenue authority, the IRA or the MRA. Number two, we're also creating a liability to pay to what? To the pension administrator. Right. So the credit will go to what? To all these what? All these deductions. So I'll just copy them and put them here. And also I'll copy this and put them, put the codes here. Right. So let me just get rid of the, okay, let me get rid of that. Okay. All right. So how much is the pay? So the pay will be what? Will be 291. The pension, 50,000. The health insurance, you just get them from there, from the payroll schedule, 13,000. Let me shift this a bit. And then you also have what? Loan payable. We have what? We have that amount, right? And lastly, we have the salaries now. So when are we paying the salaries? Are we paying now or are we paying the next month? We're paying now, okay? We're paying, let's say, on the 28th of July. So this one, we say bank, because we are crediting bank, okay? We're crediting bank with that amount, with the net payable, the net amount, okay? So as a GL or as a journal, the debit must be equal to what? The credit. So let's do the math. What's the sum there? 1370. And here also, the sum has to be what? 1370. That's correct. Okay. So if you want to check, if you just do equals this one equals that one, you get true. It means the debit equals what? Equals the credit. Right. But then we also have one more transactions or one more transaction we have overlooked here. Okay. If you go to the practical exercise, they're saying the employer will contribute 10% of basic pay. So if the employer is contributing towards your pension, it means the employer is spending money. It is an expense of the employer. So let's first of all, okay, let's go to the journal. It means we have to add another one. We have to add two more lines. I'll just do Control Shift plus. Oh, okay, just a minute. Okay, I'll select the row. Do Control Shift plus to insert a row. Okay. So if that employer contribution is an expense, so it means you have to put it here on the payroll journal, because it is also what? It is also related to what? To payroll. So I'll say pension expense in brackets, employer contribution. Okay. It's not a deduction from the employee's salary. Okay. Okay, just a minute. Okay. And pension payable, this one is what? Employee contribution. Okay. So how much is the so since this is an expense, so you get the expense account, which is 72,004. And how much are we talking about? It be equals how much are we talking about? So it will be they're saying 10% of basic pay. So I'll go to the payroll journal, or rather payroll schedule, and look at the total basic. So this is the total basic. So I just say this one times 0.1, enter. So that's the employer contribution. So that employer contribution, where is it going? We debit the expense. What is the credit? So the credit is, I said earlier that the assumption is we are paying this in the subsequent month. We're not paying now. So the credit will go to what? To um to pension payable. Okay, pension payable. But let's remove this employee contribution. Okay, but we just know that there is what on top there, that figures for the employee. Okay, so it will go to that, to the pension payable. So the credit amount will be this one. Okay, and here the pension payable is 43,022. Right, so this is our journal, which has balanced our journal, which has balanced. And you look at the, if you compare this total and this and that total, we're getting a true value there. Okay, if maybe if you, let's say I put another figure here, let's say 45,000, you see, I'm getting a false. It means the debit side is not equal to the credit side. So let me remove that. Okay, getting it true. Right, that's assumption number what? Assumption number one. Let's go to assumption number two. So for assumption number two, we're saying all payroll-related deductions are paid in the same month or period. So what this will mean is that we are not creating liabilities. We are paying them right away. Okay. So the only difference will be um, this is okay. Let me label this assumption one. Let's go to assumption number two. Okay. So I'll start with the salaries. Okay. The salaries. Okay. Salaries. And then it will be the same debit salaries account. Okay. And I also go to the pension expense, which is the employer contribution. Okay. With its corresponding account code, and also do the what? The debit. Okay. And also do the debit. 100,000. Now the credit. Okay. The credit will be all these. The credit will be all these including the pension payable, So this is the debit, credit, okay. So it will be pension payable plus 43, okay. Pay payable, which is 291. Then pension, 50. Then health insurance, 18. Then bank, and 80. Then pension again, 100. Okay, we have not completed here. So the account we are going to use, the account we're going to use for all this credit will be what? Will be bank, because we're paying in the same period, right? So I just copy that bank and apply it to all these accounts down there. Okay. So in short, all this amount is going through the bank. Right? I have put them individually because sometimes when you are processing your payments, you process them individually. But if you process all these transactions as one batch, and on the bank statement it only be one figure, then you can just credit one figure as what? You can just put bank as your credit, right? Instead of having um, these what? These individual credits. Okay. So let's again check if you have done the right calculations. It says false. Okay. So here the bank, how much is the bank? How much is the bank? That's 980. What is okay? Okay, pension payable, that's 100. Net pay, how much? 980. Then loan repayable, 35,000. Then pension payable. Okay, yeah. Now it's true. It has balanced. It has balanced. Okay. So in a nutshell, this is what we say when we say, this is what we mean when we say a payroll journal. It's the double entry. Okay. It is the general ledger impact of the transactions. What is the process like? You start with uh, the process in payroll. You start with one, timesheets. That's why you record your time for every hour a day you have worked in a particular period. Okay, number two, you calculate what? Gross pay. That's the recap. Number three, you do what? You calculate your deductions. That's where you have your pay, your pension, or other deductions you have. Okay. Then number four is what? A pay slip. This is the document you give to the employee to show them how much they paid, how much you are deducting them, and also how much they are taking home, how much they receive at the end of the month. And lastly, you record your transactions in the general ledger. Okay, so you say GL or payroll 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 journal. Yes. So with that, I've come to the end uh, of this session, which is preparation of the what of the payroll journal. Right. And thank you for your time. Bye bye.